I messed my hair up.
Civil Group, Real Estate and Ramblings, podcast, episode 21, the 2026 market truth.
Are you sure it's 21?
Competition drives price.
You sure it's 21?
You're really going to start that. You're starting out that way. I have no idea what friggin' episode it is. It's like in the beginning of the 20s somewhere, so I just chose 21 out of nowhere. This
is going to be episode 21.
Yep.
We're starting out 2026 with episode 20.
It's somewhere in there.
All right,
anyway, hi everybody. It's been a hot minute. This is our first podcast in 2026, Michael.
Yeah, we were so busy in January we couldn't do it until February.
Who would have guessed? Because beginning of January you did your normal the sky is falling and nobody's going to sell a house ever again in the entire universe. And then look at us in January.
I don't know if I would put it
pretty much like that extreme. It's pretty much that extreme.
I mean,
and then we were so busy, so I guess it's a happy New Year.
We were so busy,
even though it's almost Valentine's Day. Just
so busy in the cold and the snow, which is unusual.
Yep.
Surprise, surprise.
I mean, 10 years ago, if I had told you we'd be this busy with over a foot of snow on the ground, never.
You would have been in Florida.
Yeah, I would have been in Florida. Anyway, everybody, it is role reversal time because for those of you who don't know, I usually organize the outline for our podcast that we'd never stay on anyway. But this podcast episode, Michael Civil dropped an outline on my desk today, of course, last minute. So it wasn't this morning.
It wasn't last minute.
It was pretty much last minute.
I threw some ideas around earlier in the week.
We will see how this shakes out if the two of us can even begin to stay on topic. But to start, Michael, music.
A little Ozzy Osbourne, Crazy Train.
Why?
Well, one, Ozzy Osbourne recently passed away.
Mm-hmm.
And two, real estate's a crazy train.
Very true. And getting crazier.
All the time.
And we're getting older and it's getting crazier.
But that's how it goes.
Anyway, if you're a seller in 2026 and your agent is telling you less exposure is better, you might want to ask who that strategy is really protecting. In this episode, we're going to do a 2026 market reality check, and we're talking about private exclusives, off-market sales, and team-only listings. Because in our opinion, some of these strategies don't maximize value. Really, all they do is maximize the control of the listing for the listing agent. And just the listing agent.
And the listing broker.
So, Michael, how have you felt so far that our 2026 market is shaping up? I guess we call it the spring, even though it's winter. We're going to call it the spring because it feels like the spring already.
Well, Super Bowl Sundays, traditionally, you and I always say they kick off of our spring market. I guess we had the Super Bowl. Was it last Sunday?
It was. It was boring.
It was kind of boring.
It was kind of a non-event, sadly.
I know. Didn't even really cook or get into anything. It was kind of beat. But happy for the Seahawks. Glad to see the Patriots lose.
Always glad to see the Patriots lose.
Hopefully,
even though I'm from New England, I love seeing the Patriots lose.
Maybe now they'll make an extra $1 billion on the sale of the Seahawks. That's all going to charity.
I read that. That's pretty cool.
Yeah, it's very cool.
So how do you characterize so far this winter-spring 2026?
So I think, when we're talking about our market, right, we're in Philadelphia Metro, we have a bunch of sub-markets, right? So where we do business in the main line, we do business downtown. We're based out of Chestnut Hill. We do business in Springfield, White Marshall, or whatever. I feel like the current market is a continuation of what we saw the tail end of the fourth quarter, right?
2025.
We had a flurry of sales, right? In October, November.
Inventory is still...
We closed a bunch out
low
in December. And inventory still super tight. We had properties that we were talking to sellers about the right time to list, et cetera. And in our follow-ups, because we're, sometimes not just a 1-step, 2-step, we're like a 3-step, sitting around the dining room table, talking about market conditions, talking about pricing, talking about prep, talking about photos, talking about
the
price.
right time to list.
Right. I don't think in years past we would have ever recommended to a seller, hey, there's 10 inches of snow on the ground that's rock solid, and it's going to be in the negatives this weekend. We should list your house.
Yep. Not only did we do that once, we did that with 3 houses in January.
Right.
One of which came, well, 2, all of them, there was snow on the ground, but 2, it was physically snowing during the opens.
Well, yeah, Anderson.
It was big time snowing.
It was that storm.
Saturday, Sunday, big time snowing. It's the first set of snow we got.
And then this past weekend.
And then, but if you go back to Anderson, physically snowing, unexpected levels, not the big snow, it was the one before that. So it was beginning of January. Tom Brummett, who sat the opens there, had 20 people through on Saturday. And I think it was either he or Amin on Sunday, 20-something people through on Sunday.
Right.
So if you look at that kind of activity, physically snowing out, that tells you a lot beginning of January.
So look at, we had one in Erdenheim, in Chesney Downs, and we had one in Narberth, Lower Merion, right? Main line.
Which we'll get more specific later, but the overall market picture of those.
2 very different markets, 2 very different price points, right? And in Erdenheim, Chesney Downs, we had what? 24 scheduled showings.
Like that. Yep.
And then 2 open houses.
Yep.
On the coldest days of the year.
Yep. 2
open houses and another 40 people through.
Yep.
So over 60 people through the house at a time of year that traditionally we wouldn't feel that.
Right.
But
snapshot.
But real quick snapshot.
I'm trying to keep you
I know. But you're going to have to
Go ahead.
Let go of the reins a little bit here, Ranella. Meeting with that seller 10 days before we listed, she asked the week we were listing. She even emailed us. Is this the right time to list, right? But when we met with her the 10 days earlier and we said, this is the date, this is why, we had gone back and we had looked at all of Springfield Township, all of the different price points. And we looked at the inventory prior to the new year. And then we looked at the inventory since the new year, right? And houses after Thanksgiving started getting snapped up. And all the holdover inventory from last fall, starting January 2nd, started getting snapped up. And anything that came to market was sold relatively quickly, maybe the first weekend, or definitely within the first week. I think it was something like 22 houses had transacted since January 2nd. That's bananas. So everyone's talking about rates. Rates are going to go down and the market's going to get it's going to go crazy. But I feel like whether it's that noise is pushing buyers to get in now and try and get what they can get. Because the competition is going to be perceived to be so much worse. We always talk about that, though. We always talk about that these first houses, not at this time, but traditionally we have found that the first few dribbles of homes on the market in the spring, now this is earlier than we ever would have expected, get snapped up at a pretty high rate because sometimes that pent-up demand is concerned of what else is coming. The holdover demand of the people that didn't buy the previous year and the incoming demand of the people that want to move this spring because of life events or whatever, blah, 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 blah. So sometimes we feel like the pull this time of year increases and our sellers who can get on early do the best. Never would have thought we would have seen the outcomes that we saw. No. But we're still talking about overall market conditions thus far in the spring. So there's still real sensitivity to pricing. Feel like overpricing could really have a chilling effect on some of the things that we saw this weekend. You and I are still very much about strategically pricing the property. And that's not underpricing the home, but it's absolutely not overpricing the home.
We're not being aspirational with these numbers. We're trying to be as realistic as you can, although not an exact science, but you try and get to that number where we exceeded buyers' expectations walking in the door and we expose it to a large market.
Yeah, exactly. Good homes are still creating competition. Good homes that are well priced are exceeding expectations. Right?
Yeah.
We're definitely not in the frenzy that we are in 2021, so to speak. But I feel like if you properly position a home in terms of prep, photos, and price, the
3 Ps.
You can in certain segments of our market, you can absolutely create the same frenzy.
Yeah, but it's not just 3 Ps. It also comes down to real estate 101. It's a lot about neighborhoods. It's a lot about location. It's a lot about school districts. I mean, it's still some of that stuff. That's the most high demand attributes are still in high demand and hard to come by. And if you really need to be in a certain school district or really need to be in a certain neighborhood, that frenzy is elevated.
So I guess where we were going or where I've been going or where our conversations have been going has been around sort of and in a tight inventory environment like we're in, right? Exposure is key. And exposure for our sellers is leverage.
Yeah, we are big proponents of that.
Which brings us, Jennifer, drum roll please, to
private exclusives.
We've talked about this before, right?
Yeah.
Probably more so in a rant than in a controlled, let's educate it
and break it down. Yeah, educate our audience and break it down.
Me wanting to take a flamethrower to the whole
certain
thing.
Listings, certain ideas. Yes.
But I guess we've been seeing
more
a pattern.
Yeah.
Arising.
Right.
Amongst some of our peers.
Right.
That we felt like we should dive into it a little bit more.
Right.
Because it's a crazy train.
Right.
So, Jen, why don't you, since you're normally the professor and the educator, the coach.
Here it comes. I
knew
you were going to say coach.
Why don't you take us through sort of what are private exclusives, what's off market?
Well, I think
what are these, quote, team listings that we're seeing?
Yeah, I think that there's this private exclusive terminology has just really always been our off-market quiet listings, right? Team listings, or as we really used to call them, pocket listings.
So real quick.
And so back in the day, it's all the same.
But off-market, you mean not in the MLS?
Well, I was getting to that if you wanted me to educate the audience. I was working on that.
So
you could just... Yeah,
drink your soda
and just mind your own business over there.
Okay.
If you asked me,
So you have the conch.
I do have the conch, but you asked me to explain what they are. But they're currently called private exclusives. But what I'm trying to get at in defining what they are is they are no different than saying an off-market listing or saying what we used to call back in the day, because we're old, pocket listings or team listings. It's all the same thing. It all means that they are not publicly traded on the MLS. They're not publicly put out there and advertised on the MLS, right? They're not syndicated broadly, nationally, internationally. They're not exposed to this large market, right? They are marketed internally, depending on who does it. It's either very internal, only amongst their team, or very internal, one agent has it and only one agent wants to sell it, or then maybe it's just internal based on their broker, or then it's just kind of regional, or it's just out to their followers or their sphere of influence. And so that market is very shrunken. And a lot of agents will make the perception out there that it's kind of this exclusive access and only certain people can get access to these listings. So, oh, by the way, if you want access to listing, you better be our audience and not somebody else's audience.
Sounds kind of, when you put it like that, sounds sort of discriminatory.
I mean,
you better be part of our audience.
Yeah, I wouldn't.
So I better be part of your club. I got to be part of your club.
Kind of, but if I could finish.
Okay, I was just the way you said it sounded worse than I ever make it.
No, it is not. I did not. I just mean sometimes it depends on the agent. Some agents just run on their own and will only sell it themselves, or only within their brokerage, or only within a certain sphere of influence. And if you're not following that certain agent on Instagram or whatever it might be, you may not be given the perception is this exclusive access to these, right?
How many? I mean, we've done this.
No, we haven't. Would you like me to finish defining it before you want to just kind of go off the deep end with it?
I wasn't. I was still on the shallow end.
Not really.
I was on the sun deck.
Okay. So anyway, and then other people will frame it as getting in front of the market, right? Like, let's get in front of the market. Let's test some pricing.
Let's test our aspirational pricing.
Yes. Let's see how the market perceives certain things before we bring in staging. Like, some people will frame it that way.
But why would you call it the market if you're only going to a handful of people? Because a handful of people doesn't necessarily make the market.
No.
So how are you getting good data?
We've given a lot of examples in the past of where, as much as we have a lot of listings in a certain area, and you think you know every buyer that's going to cross that threshold because you've seen them at other houses, it always surprises us that there are new buyers come into the fold that could have been from other parts of the country, have seen it online, their family's seen it online, flipped it to them and said, hey, this might, be something that interests you. And so it always surprises us, as much as we think we know the audience for a certain listing because we've seen the same people in these houses looking, that the new buyers that come into the fold with certain listings when they're listed publicly. So that's the definition as we go through what we're going to talk about today. That's what an off-market, or what used to be a pocket listing, that's how you kind of define it.
I guess the thing that caught my eye recently, or my ear recently, is there seems to be a talking out of both sides of their mouth now when it comes to private exclusives, right? We had all, like, in the beginning, it was like this drumbeat of how good this is for the seller.
Well, and I think that some brokerages wanted to drive traffic to their websites or to their listings. And so in an effort to drive more traffic, exclusive traffic, they would say that they were only posted on their website. And I think that that's some of the beginnings of it, because back in the day, we used to do it occasionally, and we can talk later about why you would do it and what's positive about it. But you've seen recently, you've seen recently where some agents are framing it a little differently.
I was shocked.
Last night was the one post we saw.
That was last night, but it's not the first time I've heard it.
Yeah. So why don't you educate on what you're hearing?
A competitor did this post, talking about their private exclusives and how many off-market sales they've had, et cetera, et cetera. And what was interesting was, and you tapped on it a minute ago, was this comment of getting in front of the market. And it wasn't from a seller's standpoint of getting in front of the market. It was from a buyer agent standpoint of the buyers getting in front of the market, because if you worked with me or someone from my brokerage, you would have access to this private exclusive marketplace, right? And what really caught my attention was the comments were, the competitor posted, if you're a buyer looking to bypass a competitive market, not overpay, and not waive inspections, you should contact this agent or someone in their brokerage for access to their private inventory. Just let that sit in, Ranella, for a second, right? Because this is a totally different take than the power of the private exclusive for a seller. Because when you're talking about removing certain things, a buyer's willingness to overpay or having to overpay, or a buyer not having to waive inspections, or let's just talk about any contingencies, or a buyer having to give you the settlement date and the terms that you want, Mr. or Mrs. Seller, like who's winning there?
Yeah. Think about it, Michael, from a seller's perspective. I mean, if you think about that from a seller's perspective, is the seller really winning there? Is that agent or that brokerage really doing what's in the best interest of the seller or the listing?
I mean, if the buyers are being told they can avoid competition, avoid bidding wars, avoid overpaying, that means the seller's avoiding competition too. So if I have my largest asset,
Yep.
right?
Yep.
And I'm only going to get to be able to sell it once, I don't get a do-over.
Yep.
I want the largest pool of buyers.
Yeah, you want to be net the highest price for your asset.
I mean, it was crazy.
How does having inspections and not being in competition benefit the seller?
And even in competition, we're having inspections at times.
Yeah, and go ahead and inspect all you want, but when you frame it in a way to say to a buyer, you get to inspect, you're not going to waive inspections. Well, that's just not going to be in the best interest of that seller.
So it just seems like there's two sides of that coin of there's all this power for the seller. We can test the market. We can try your aspirational pricing. We don't have to increase the days on market. We don't have to do this. We don't have to do that. I mean, we can talk about the days on market because anything that's been private exclusive around here, we know about it. Like it's not like some mystery. And then when you make it through the pool of buyers, and nobody wanted your house.
It's the same. It's the same thing. You're kind of getting stale on the market.
You bringing them back in at the lower price?
No.
They've already said no.
Yeah. And then they're all wondering why it hadn't sold if that was the number.
And then they start the reasons why they didn't pick it up at the higher price is amplified. See, I was right. That septic system was dead.
Yep. That's so true.
Right?
Yeah. So, Michael, really, competition drives price, right? So if you're going to break this down logically, competition drives price. Competition will net your seller, theoretically, if positioned properly, the highest number.
So why I don't want to get into specifics about individual transactions. So I don't want to, when we're talking in broad strokes about our weekend, let's not talk about the specific properties. Let's talk about what
happened on all of them. We don't need to. What
unfolded. And I think the one that, and this is something that I've been talking about for years now. How long have we been doing this podcast?
3 years, maybe?
3 years?
2.5?
2.5? Because we've been in this, not fight, but we've been dealing with this misinformation, which is unfortunate because it's something that I feel really brings our industry down.
We feel
the puffery, Jen.
Yeah, we feel very strongly about putting our sellers first and netting our sellers the best offer we can net our sellers, or positioning our sellers to net not only the best price, but the best.
So one of our sellers
this weekend we're talking
both of our sellers were approached about selling their homes privately.
It's true.
Right? And
without realtors even. Knocks on the door.
But what I think but the the conversation revolves around not having to put it on the market and saving commission, right? In both instances, the sellers, had they taken the private path, the quote, easier path.
And it's interesting. It did happen to both these sellers.
Both of them.
Yeah, it's crazy.
And we're not talking
in January,
but we're not talking tens of thousands.
We're talking
of dollars.
about hundreds of thousands.
We are talking about hundreds
we're not
of thousands of dollars that these sellers would have left on the table
had they
gone this private exclusive
or even just off market. No realtor, one realtor. Yeah.
Right?
Yeah.
That to me is bananas. And it's bananas to me then, right after we ink these deals, which are clean, tight, tons of money in escrow, that then I see another post beating the drum of, hey, buyers, get ahead of the market. Don't be in a competitive situation. You don't have to pay over ask. You don't have to waive your inspections or waive your contingencies. If I'm a seller sitting out there, why
would I ever want to go down that?
In this limited amount of inventory, right? Which apparently buyer demand is going to go up when interest rates come down only a half a point this spring. We're going to have buyers are going to be falling out. It's going to be raining buyers. I just figured out my song to close out.
Oh, no.
Yeah, I just figured out the closer.
Yeah, so Michael, really, more buyers, more leverage, right?
Yep.
More visibility means more urgency.
Yep.
And your home is worth what the most motivated buyer is willing to pay, not what one quiet buyer wants to do behind closed doors. And in both of those situations, it was one quiet buyer. Well, in one of the situations, one of these houses had multiple quiet buyers that wanted to buy it. In both of those situations, our sellers took our advice. Our sellers leaned on us. And our sellers, as you said, would have left and we're not exaggerating.
I mean, the one seller, I did get a little uncomfortable. The one seller, an attorney, was like, "You guys, you're my proxy this weekend. Do what you want to do. Close the deal, and I trust you." And like, love.
They both kind of actually.
Yeah, but I totally love that. Trust in our professionalism and our abilities. But, sorry, we brought them in at every turn. Like, hey, this is what's going on. Like the play-by-play. And to the point that yesterday, 3 days removed from the play-by-play, Jen got an email from the one seller of, that she was missing our emails of the excitement of the activity and what was happening. Like, hey, we're up to 60 showings. Like, what do you mean 60 showings? How is that even possible?
Yep.
It's -8 degrees outside.
Yeah. Yeah, no, she did. She did. So limited exposures, limited data, as we talked about. And if you shrink that audience, Michael, you're shrinking the ceiling.
Taking it down.
But when the same brokerage, so let's continue, if we're to diving into it and educating the consumer as we are doing and not allowing you to rant and actually having real situations and real statistics. If you shrink that audience, you're shrinking the ceiling.
I'm sorry. Our information here is real. We're not making this up.
No, that's what I'm saying. We have real situations that we've gone through this January that's just been,
We're not out there doing posts every single day about interest rates and inventory and what I'm wearing.
Yes.
What I had for lunch.
No.
Why not? Do we have time?
No.
We don't have time.
So, Michael, when the same brokerage controls the listings and potentially the buyers, then where is the incentive? The incentive shifts to that broker. The incentive is not with the seller in any of those situations, because why would it be?
Well, I mean, I think of a house nearby that got sold privately twice within 3-month span. right? And it went up for a number privately. A small pool of people knew about it. It got snapped up. Buyer didn't like the house, put it back out privately, and lo and behold, it went for more money. So if I was
a 2-month span,
so if I was the seller, right?
Wasn't in their best
and who
interest.
knows? Maybe they just wanted out. Maybe they had to flee the country.
Okay.
You know, maybe they went to Canada.
Maybe.
Who knows?
Okay.
Who cares? The point being, you know, you don't know what you don't know. And you don't know who's out there sitting behind a keyboard in California or Colorado or wherever that didn't know about the house the first time that would have paid more in the time frame that seller probably wanted, and you could have netted more. The only person, in my opinion, that made out on that house was the realtor who privately sold it twice.
Well, and then
they made more money than anybody.
But in that, so not just with that situation, but in these situations in general, that's really where the incentive lies. So that realtor gets a double-sided commission, right? That realtor controls the deal flow. That realtor controls both sides of the deal. And that realtor is only focused on that lead capture. And that's where that strategy lies. The strategy doesn't lie in how do we position this to do the best for our seller.
Or even do the best for the buyer.
Or either.
Because maybe they're more in bed with their seller that they play golf with all the time.
Well, and I think that doesn't automatically make this wrong.
Right.
If you know, but Michael, I think that doesn't automatically make it wrong if the seller's aware and the seller understands and the seller so chooses that situation, right? But the seller has to understand what they may be leaving on the table in that situation. And there needs to be total disclosure and total openness to understanding both sides of that and really who's going to make out. And it's not going to be them.
So I think something, and I'm going to take over, I think, one of your segments, and I'm going to give a little shout out to Germantown Academy class of 93 alum Bradley Cooper. I think his second or third movie may have been Failure to Launch. One Hot American Summer, I think, was his first. Don't quote me on that, but Failure to Launch.
I don't even remember him being in Failure to Launch, but anyway.
I think he was in Failure to Launch.
Okay.
I'm almost certain.
I'm sure.
But anyway, I wanted to talk about launch because launch goes into something, a drum we always beat, prep, photos, and price, right? And all of a sudden, we're hearing so much about prep and staging. And we can do this and we can do that and we'll do this for you. Things that we've been doing for years. But like launching a listing, you know, you get to do it once.
Yeah. You always say that you can't recapture that momentum more than one time.
Can't put the genie back in the bottle.
No. Well, I wasn't going to go as far as to quote you on that, but no. Yes. The premise being you can't recapture that momentum.
And so when we're
you say that all the time.
What? Can't put the genie back in the bottle?
Yeah.
You can't.
I know. Go ahead. I'm just laughing. I hear that all the time.
I mean, because think about it.
Yeah, you get one chance to launch a property and one chance to build that momentum. And it's very difficult if mispriced or mispositioned to recapture that momentum, that marketing momentum, that exposure momentum. So whether it's, which I'm sure you're going to go into, and I'm interrupting you. And
no, you're good. But keep going.
Yeah, whether it's exposed in social media these days or exposed on the MLS, you are losing a lot of that momentum if it doesn't sell also, which is another aspect of it.
So scarcity only works if everyone knows about the property. So not everyone's on a certain team's page. They might not even know that team who that team is.
I mean, how many clients do we talk to that aren't even on social media day in and day out? Like people are starting to not be on it as much. And so it's like,
because it's an ugly place.
Says the king of social media.
Well, you know, I like to see what our peers are up to.
Anyway, our peers. That's what all you're looking at on there.
Yeah, I've been following the Olympics.
Research.
Yeah, market research. But you know, it's if a post falls in the woods, does anybody hear it?
Mm.
Does anybody see it? So like if you're limiting your exposure,
Yeah.
you know, who's really coming to the listing?
Mm-hmm.
If I was a seller in today's market with the limited inventory, the
list my house, list it publicly, list it as wisely as we can, strategically pricing, getting it ready and get it out there.
and strategically pricing, let's just be clear, we're not talking about underpricing.
No.
The market's going to set the number.
Yeah, absolutely.
Well, Jennifer,
Well, Michael.
I think we covered just about everything.
So, Michael, to sum it up, what's your advice for a 2026 seller?
I mean, if I was selling in 2026, I would probably talk to more than one agent, which happens to us sometimes.
All the time.
I mean, I feel like sometimes people are checking their agent's number with us.
We're not going to stay on topic.
Okay, sorry.
Do not get into that rant.
No.
Please.
Okay.
Nope.
Eh.
Nope.
I mean, I would check in with more than one agent, and I would want to know what their plan, what's their exposure plan. Like, how are they going to launch my house? You know, not just the buyers that you might be working with or your firm's working with. Like, who else is out there? How are you gonna tap into that?
How are you going to maximize that?
Yeah.
Yeah, absolutely. Maximize the competition. But I think that's with the pent up demand, the low inventory, the now rates getting high, the rates hopefully coming down a little bit. How are you going to maximize the competition for my listing? Because with maximum competition, we're still getting big numbers out there. Absolutely.
Yeah, totally.
So, Michael, in real estate, transparency creates leverage, competition creates price, and exposing it creates both of those things, don't you think?
Absolutely. And I think you and I firmly fall in the camp that listing a property, raising up the flagpole for everybody to see, has netted and will continue to net our sellers the most money and the best possible terms in the market that we're currently in.
Yeah, and we're happy to cooperate with anybody. We're happy to cooperate. And I think that's bring your buyers. Let's do the best for these sellers. Absolutely.
Yeah. Crazy.
So everybody, you have wasted another, I don't even know how much, Justin, 30 to 45 minutes. Michael really went off, so it might have been 40 minutes. Spending time with us at Real Estate and Ramblings in the Civil Group. If you have anything you want us to make sure that we highlight in coming episodes, make sure you DM us on Instagram at the Civil Group. Thanks for listening, and stay tuned for more ramblings from the Civil Group. See you out on that spring market tour.
Go Phils.